Hi, and welcome to this simple analysis of KMCP. For those of you who are not familiar with the stock, well, good for you, you're still in the plus. For the rest of us, me myself as well, I have a small take in KMCP. Well, let's just hope it turns around soon. So, what is KMCP? Well, KMC Properties is a real estate company. It is based in Norway, Sweden, Finland, Denmark and Netherlands, while their main portfolio is in Norway. They currently hold around 65 industrial properties, and I personally like that it provides a little bit of different currency exposure. KMCP have managed to find a small little niche with fishery production, but that is not all. Like, their business strategy is based on investing in high-yield industrial and logistical properties, typically light industry and warehouse segments, where they especially look for critical infrastructure for the lessees. They are currently growing quite fast, and they have repeated that they will continue with the expected growth. They expect to have around 8 billion NOK at the end of 2025. They keep on trying to keep the leases at triple net and have a focus on keeping their tenant for long times. They want to be the preferred partner and is showing some potential with its collaborator Bevi, which is kind of also the main owner. So just one thing that I would like to mention about this company is that it really likes its debt. I would say that it is probably one of the worst interest coverage ratios that I found in Sweden and Norway. It's actually below 2, but due to their high yield, for example, DNB is saying, well, it works as a buffer, you don't need to be too worried. Their high inflow of cash basically, and the lack of giving out dividends, while the owners are helping with its growth, they have been able to handle 2023 quite decent. So, how was last year for KMCP? Well, it has had some ups and downs. The valuation have gone up and down quite a lot and have not provided any of the shareholders with the safety of growth. It has, however, taught shareholders the pain being on the negative side of the market, and they have worked quite hard to fix some of their debt. If you're looking at the current liabilities on Q1 of KMCP, you can see it's really high. That was a huge bond that cost quite a lot of money, and they have been able to, well, fix that a little bit. The salmon tax kind of created a little bit of uncertainty for KMCP, especially since some of the main owners are quite heavily into fisheries. And the big slaughterhouse was a big question mark. It looks like they might be going through it anyways. Some of the uncertainty might have been solved for now. The increased interests have really slowed down the cash generation for KMCP as well. And the increased interests have really slowed down the cash generation of KMCP. Of course, it still works as a buffer, but it is something to just pay attention to if you believe that the interest will keep on going. When it comes to the statement, I only have added a few years of data here. KMC Properties only came to the Nordic Stock Exchange a few years ago, so not a lot of old data available there. But you can see the rental income have had quite a nice increase, and it continues into Q1 in 2023. You can see Q1 2023 is already higher than the entireness of 2020. It reached 96 million NOK. The results are a little bit more difficult. If we add the fair value, they have not managed to keep any growth, though when we add results with fair value, it looks quite a bit safer. The value of buildings have still been increased by quite a lot, but from what I understand, the current valuation of a building is around 1,000 euros or 10,000 NOK, while constructing the same amount of space per square meter now is around 20,000 NOK, so it seems like it's not too highly evaluated. Their return on equity did start quite high, but is slowly going low. DNB themselves, in their analysis, is expecting the return on equity to be between 4 and 5% going forward the next few years. Personally, I do actually like the statement. It provides a little bit of safety that is needed in the current day, though I would like to mention that the war against the interest rate is a legit thing for KMC. We will go a little bit deeper into that. And when it comes to the balance, they have quite the high loan to value. It is at least going down, though it is still on the higher side, as most companies actually try to keep it below 50. They're above 60. So this does not generate the safety for banks and these kind of things when it comes to lower interest rates. I think KMCP had one of the worst interest rates on the stock exchange when it comes to real estate right now. They have managed to keep on growing their real estate value and property amount throughout the years, and they do actually expect to reach 8,000 by the end of 2024, as I mentioned earlier. Honestly though, looking at the CACL, it makes me feel a little bit sketchy, but it's actually sold now, so it shouldn't be a problem. It's just when current liabilities is above current asset, it just means that they pay more than they have available the next 1 year. So it just feels a little bit scary. But here it is sold and shouldn't create any issues. Personally, I don't really like this balance. It should be mentioned that DNB said that they have a good balance, but for me, it looks very bad. High loan to value, super high current liabilities, and higher interest-bearing liabilities than equity. Yeah, it just makes me feel a little bit sketchy. But you can sprinkle a little bit of sunshine on it when you look at the growth of the real estate and the fact that the loan to value is actually decreasing. When it comes to the cash flow, I would say it is a little bit the same as with the statement. The cash flow is growing, and Q1 2023 is reaching operations of the entireness of 2021. And that is more or less requiring a little bit of respect, I would say. It should be mentioned that it is a lot of share splits in the stock. So basically, the owners are investing a lot of money into the stock instead of continuing to take up loans or take up less loans. Bevi and Salmar, like the owners there, is putting money into the stock at specific prices. These prices are not changed, and the last time they did it was actually at a higher value than the stock in itself. You can argue that this is a good thing. Personally, I would like to see that shareholders would be added in a little bit more actively, but if they're able to grow the company, they don't take up too much debt, they have the control, it could be a good thing. At least it helps with the growth, and it shows that the owners are active in the company, which is also a good thing. As you can see here though, the amount of investments and debt uptake is quite high, and it has been the main driver for the growth that they currently have. Personally, as a quick summary, I would say that the cash flow is taking up some risk. At the same time, it's getting help from the owners to continue the growth that they have advertising about. It has provided some boons to their operations. The cash flow looks acceptable. They do get in a decent amount of money, but it's still a little bit scary, all the debt that they have, the interest rates that they need to pay. So a risky with a growing flow. So when it comes to the downsides, KMCP is for now not really diversified. And when it comes to their lessees, like a lot of their income comes from Bevi themselves, and the main two companies stand for 65% of the net income. So basically that means that it's no diversification. What happens if Bevi starts to do bad? So there is no dividend. People can argue that that is a good thing when it comes to the current market environment, but as most of the people that I'm familiar with is very dividend heavy when it comes to investments. Personally as well, I prefer dividend investment. I take it as one of the downsides. They have mentioned that they should start with a dividend in 2024, so we will just have to wait and see. KMCP is still quite small, so it's easier for us to see the growth that they have, but it should be expected that it will be a little bit more difficult when it goes further into the future. We're not there yet, but the bigger they are, the more difficult it will be to see the growth in itself, right? So, yeah. Of course, we want to continue into the debt pipe. The loan to value is still quite high, and over 60% is for me not an okay level, and it stops me from at least wanting to invest more into the company. They are saying the loan to value is comfortable. So the company themselves feel like this is not a problem. So if you trust the leadership, it shouldn't be any problem at all. Again, with the debt, the current ICR is below 2. It's not really a good thing. They have around 37% debt control, like hedging, so it shouldn't be that bad. But at the same time, if the interest rate continues to go up in the future, it can be a problem. And I do count it as one of the biggest risk factors in the stock. Lastly, I will mention the Norwegian politics. Currently, the Norwegian politics have been quite willing to increase taxes and create what some might call havoc in certain areas. I think is better than being compared to certain countries in South America when it comes to political safety. This might decrease the potential investments, at least in the Norway area, for some of their main lessees. They have managed to improve their income by quite a lot, even if it might not be as noticeable on the earnings per share as on some other stocks. The available cash that the company will have in the future will help promoting further growth. They have also had entrance to the food and packaging industries, which is going to be needed while going forward. This is hopefully creating some security to the high yields that they have. BEWI and SalMar is both having a chunk of ownership in KMCP. This is creating a strong backbone and a willingness to continue investment and keeping long-term partners. It is though a little bit scary with BEWI that have 50% of net income alone. The management have been quite confident in the growth of KMCP and is standing by that they can continue growing even in the current market environment, so not showing any fear at all. And in late June, KMCP was able to secure full refinancing of their big bond, where about half of it is bank debt and the rest is a new bond loan. This decreases their interest cost. KMCP might be one of the few companies that actually decrease their interest rate during the current market. Where is KMCP going forward? Well, they will focus a little bit more on ESG. They are currently looking into solar PV and ESS battery installations. They are also going to be mapping the energy labeling based on EU requirement, and they have a few ongoing projects that is working on mapping the current potential of what they have. They will continue growing and probably water out more shares going forward. You can see on the picture to the right the expected completion time on some of their projects. It is also always possible with other not mentioned acquisitions. I hope to see that they will improve their diversification on tenants, as right now it is way too much income just from BEWI alone. The dividend should start coming in from 2024 from what they are stating, though we will just wait and see what is happening. It is looking good from the growth in value creation though. Their high yield should help KMCP with good economical control in these rough times, and well, basically a buffer, right? And with a slightly lower interest rate now, their ICR and income will look better going forward. If the interest rates are near the top and in medium term starting to go down, KMCP should have a good position. Forward looking, KMCP is expecting interest costs at around 211 million a year, with a rental yield of 412, which is an ICR slightly below 2. Their current pipeline have yields from 6.9 to 8.4%, where they have 1,500 million NOK left in investments, and the Wault is spanning from 15 to 18.9 years. As long as the tenants are economically safe, they have renters for quite a long time going forward. And when it comes to the disclaimer, remember this is not financial advice for you to buy or sell KMCP. It's just a second opinion, right? So if you're interested in a company, take a look, but please do your own research on it as well. It's very interesting. And if you have something you would like to add, please add it into a comment. It might help other people that are looking at the video or might want to invest. So some of the main resources that I was using was their presentations. I also got a bachelor document from Mats on Sharewheel, which was an interesting read, and also have gone through a few of the DNB analysis. So other than that, thanks and cheers.